And that's the story with Anadarko and Devon. And isn't gas part of the greening revolution as well? Because people moving from clean burning gas as opposed to oil.
Very true, and if you look at the exchange traded funds, there's been a proliferation of which energy, which one of these green or alternative energy stocks do we buy? And actually, we did a special report saying, these companies are young, they're growing very fast, and because of that, they're very volatile. They don't have a lot of shares outstanding, so it's easy to move them up and down. A lot of them are international. A lot of because the Europeans or the Japanese have less energy, they're way out in front of us, and so you have to be an international investor. Because of that, we've been recommending some of the ETFs or some of the mutual funds that manage these things, and they've done very well, but they're very volatile. So we kind of recommend it's an exciting area of this clean energy and these alternative energies. I had a graphic here, but I think we'll pass it. I think the markets might be getting ahead of themselves because if you look at some of the data in 2004, alternative energies were only representing about 2% of the global output. By 2040, it'll get up to 10%. So we're still going to be very, very dependent on traditional oil, according to the experts.
Dan, you bring up a good point earlier. You're talking about stocks, the traditional energy stocks being priced on assets, and some of these newer technologies like solar, they're clearly not being priced on their assets. They may not even be being priced on their earnings or their cash flow. We had stocks last year, some of the solar stocks like First Solar and Evergreen Solar and SunPower had huge run-ups, and we're now starting to see them come off pretty considerably from their highs. Some are off 30–40%. What do you think about the solar stocks? Do you think they're going to stay in the type of valuation they are right now, which is basically no valuation, or do they start fitting more into the traditional energy companies? What are your thoughts there?
I think what happens is, if you look at any stock like a Google or, I'm kind of looking, even like a Chipotle Mexican Grill, these companies are growth stocks and they're valued very differently and they attract growth investors. And what they're looking at is what's the potential, and I'm going to use, Chipotle Mexican Grill, because I think people have eaten there. They've only got 800 stores. They're partly owned by McDonald's. They've got some very good partners. They're organic, it's tasty food. That potential of that company growing much greater than what it is very, very high. So people want growth stocks and they're willing to pay for that, and they pay more. And I think that's what happens to some of these stocks that have a lot of potential down the road and are exciting. If you look at some of those sun-powered stocks, those alternative energy stocks are very exciting and they're doing things that are very innovative. One of the companies that you mentioned is rather than what they're doing is they're selling the solar panels to companies, and rather than, and because the government is, and actually that's partly why they're down a little bit, is because the government has kind of taken away some of those incentives. But a lot of these companies are going green, and because of the incentives and because of the payoffs that will reduce their energy demand from traditional sources, that they're able to sell a lot of these units to big businesses like Walmart and General Electric, and they're doing huge businesses. So they look at those numbers and people get excited. And another one is doing these solar-powered things where the technology makes them much more efficient than a traditional solar panels, and they sell it to the utility companies, and that company's doing really, really well. So there's some exciting things going on, and I can see why the valuations really get ahead of themselves, because it's the potential that they have, and they're growing so quickly.
Aren't these exactly the kind of stocks that people who have a high risk tolerance can chase? But for somebody with a low risk tolerance, you might be better off in something like Cypress Semiconductor, which produces chips that empower the solar panels.
And
they own part
of SunPower.
That's right.
Yeah, I would. I think personally, what we've been doing is recommending some of the ETFs and some of the mutual funds, so you have that diversification, that you have a professionally managed fund. A lot of these opportunities exist overseas because they're way ahead of us in terms of their technologies and implementation of those technologies. If I remember that particular one, I was a little concerned about the valuations. It may have come down a little bit, but I think for most viewers, I think going with the ETFs at this point and with the mutual funds is
With regard to the solars.
yeah, well, no, alternative energies and the clean energies. And there's been a proliferation, especially on the traded funds. And we're working on a special report on which ones are the better ones. And really what you want to do is to stick with the ones that are, some of them have really gotten big and some of them are pretty small, so there's more risk on the smaller ones.
Have you thought about taking a look at companies on the short side? And for our viewers that don't understand shorting, instead of buying a stock, what you do is you sell something you don't own, which to a lot of people have a hard time with that concept, but it's a way of betting negatively against companies. What's your thought on shorting energy stocks? Are we there yet? And when do you think that may become an opportunity for people? And will you do that in your recommendations?
We do some hedging just to hedge our portfolio. In terms of the shorts, I think it's a little bit dangerous because I think earlier on we said anything can happen in the energy markets that can snap prices back. You have a disruption, terrorists, yeah, all sorts of things can happen. So those prices can reverse. The areas that probably are overdone, or I think are going to have a tougher time, are some of the service stocks. That one of the things that we looked at was earnings visibility, and the earnings visibility for some of these service companies, especially the drillers, were very, very good a couple of years ago. That earnings visibility is starting to decline now. And so I think as you see those multiples expand and that growth is not going to be there, I think some of those are shorts.
Okay, so some the shorts are coming, but not now.
Yeah.
Okay.
Yeah.
Well, listen, I want to thank you for joining our show today, and I hope to see you again soon. Thank you for joining the Wealth and Wisdom Show. Next week, we have an exciting show on how to rack up profits of 15 to 40%, leveraging the real estate and debt crisis that's underway. I'm James DeGiorgia.
And I'm Jeff Garbaz for The Market Guys. Good evening.
To receive a copy of your favorite Wealth and Wisdom episode, or if you have a question or comment about our program, please feel free to write us at Wealth and Wisdom, care of WXEL, P.O. Box 6607, West Palm Beach, Florida 33405. Or call us at 1-800-915-9935, extension 4477. We look forward to hearing from you soon.